Alrighty, folks, we have our good friends Dion and Matt here, and we are going to talk about what surprised us, if anything, in 2023. And more importantly, what are we doing ourselves in 2024, and maybe even what we hope you're doing if you're interested in real estate investing in 2024. Dion, how you doing? Matt says you're in a bunker in Ukraine. Huh? You safe? You doing okay?
Yeah, I'm having lighting issues this morning. Was
Matt
my
never wanted
plan
to
to go
let
to
it go by.
Ukraine? Was my plan to actually go to Ukraine? That got changed last year.
Yeah,
Yes, with good reason.
yeah, for good reason.
Yeah.
And Matt, how are you? How is
Great.
Christmas with little ones? It's a different vibe when they're little. How was
It's called assault.
it? Complete chaos.
Yes. Yeah, it was complete and total chaos. It was 4 waves of cleaning, and yeah, it was a lot, but it was fun. It was good. It was good. Thanks for asking.
Very, very cool. Well, Matt, we'll stay with you.
Yeah.
Maybe was there anything that kind of surprised you about 2023? We're 5 or 6 days away from the year being behind us. Anything economy, business, real estate, anything in general surprised you about 2023?
Yeah, I was super surprised at how the market didn't crash. Not at all. I think the most surprising thing was it was just a constant reminder of how slow things change.
Yeah.
Things don't change quickly. Even with rates going up as quickly as they did, the market largely has already started adapting, and now rates are down, and my agents are telling me that they're getting busy.
Yeah.
And that's in December. Like
Crazy.
So the things that shock me are still low inventory. I think it's going to be perpetually low. That's not the shocking part. The shocking part is that the stuff that's on still flying off.
Yeah.
Rents are still higher. We're still renting stuff out in December. We just finished a project and did December rents. So, I mean, I think as a whole, the thing that the top thing that I continue to be impressed by is the resiliency and slowness of market change and shift.
Yeah.
It's just
I like
I'm not seeing crashing. I'm not seeing any of these things.
Yeah. Dion, anything catch you by surprise in 2023?
The two top things that surprised me the most in 2023 was one, Peter Schiff threatening to sue me, and two, Matt being wrong.
Peter Schiff threatening to sue you.
He did.
Don't come at me, bro. I don't want to know. Go to
And then
Dion's
Matt-
channel for that. I don't want any of that on mine.
Matt being wrong.
What? About
Oh
what?
no.
Beginning of the
that?
year,
Yeah.
I called for a 10% increase in property values.
Yep.
Mike, you called for flat, and Matt, you called for 10% drop.
Yes.
And we've seen a 3% year over year increase. Even though we have seasonality right now, it's year over year, we're up 3%. So that's not 10% down. It's not 10% up, right? I never expect to be right on predictions. So it wouldn't shock. That would have shocked me more as if it went up 10%.
Yeah.
I try not to do the prediction thing. It's the market, the rates, the rents, the prices. That never tells me when to buy. It's, am I ready and did I find a great deal?
Yeah.
And so I think what shocked me in 2023 is that there were so many people still sitting on the sidelines, looking at predictions, waiting for something that still isn't happening. And no matter how much we rail against it, saying, don't let the crash bros cost you all of this money.
Yeah. When I think about 2023, I go back to the things that I got wrong. One, I called a recession in 2023. I think it was Q2, Q3. Didn't happen. In fact, Q3's been reported at 4.9% GDP growth. Clearly not a recession.
Yeah.
I got that one wrong. I believe on January 2nd, I called interest rates to be about 6 or 6.5. They got as high as 8. Let me just say that a lot of people, and by a lot, I probably mean 30 to 40 people, chimed in with various versions of how does it feel to be wrong, swing and a miss, just coming at me, bro. On that front, I was surprised. And again, this is from a guy who's been watching it for 30 years. The violent moves in interest rates.
Oh yeah.
Right? What we have seen this year, both up and down, are standard deviations, multiple standard deviations from the norm. That was surprising. And I guess the last one that is, it still surprises me that people year after year listen to the Crash Bros. They're so bad they're recycling reasons for the crash now. They're
Yeah.
back on silver tsunami. Some are talking about foreclosures. And man, these people are just blindly following stupid creators of porn doom. And I can't help them. In fact, I don't even try to help them, right? That's Dion's job, right? Dion's job is to deal with the guys in the parking lot who are just blindly following stupid people.
Uh-huh.
And, I'll deal with the folks who have some interest. But it does surprise me that those channels continue to grow. They continue to be wrong. They continue to delete evidence. And you guys follow them. They're making you poor.
Yeah.
Just shocking to me. So
It
with
is.
2023 behind us,
Mhm.
let's talk about 2024. This time we'll go to Dion first. Dion, 2024, what are you looking at? What are you thinking? What's Dion going to do? You're going to take a big trip. What's 2024 like for Dion?
So in 2023, if everybody looks back at the beginning of the year, the Crash Bros had new interesting reasons why there was going to be a crash. Don't take action. In the middle of 2023, they had new interesting reasons why there's going to be a crash. Don't take any action. I think in 2024, I'm ready. I'm sitting here ready for the new, never before heard of, maybe recycled, but never before heard of reason for the crash, giving people an excuse not to take action. And I'm going to try to join them. This I think will confuse a lot of people. My goal is to not buy a property in 2024.
Ooh.
Because people have to understand the chronology of your investing. And the one thing that I think that makes me very different than almost everyone that I see in social media world is I know what enough is.
Right.
I don't see that or hear that from anybody. And if you're in growth phase, ignore everything I'm saying, right? Because growth phase is not when you think of enough. You think how to get the next. But I've reached enough. And
I love that.
I'm stabilizing, right? I've got some tenant flips and rehabs going on. I've got doing my first burr. And I look forward to 2024. Here's my actual goal. I think who was I think it was Justin Canberra was on my channel last week for my live stream. And somebody asked us, what are your 2024 goals? And he came up with this very eloquent, well thought out, like list of 2024. I was like, wow, that's impressive. And I said, I have one goal. It is to spend more time out of the US than in the US. And so that will be in any area that means my portfolio is stable enough for me to travel.
Yep.
I like it. I like it. That's a wonderful goal. I look forward to you achieving that in spades. As long as you are in Vegas in, call it mid-February, I'm good.
Absolutely.
Yes.
I'm good. Awesome. Awesome. Well, Matt, what about you? You still have the W-2 as we're rolling to the end of the year? You're a father of 4 now. Is that finally done and behind you? What's
Father of
2024
4,
like?
still a father of 4, not behind me. Still currently a father of 4. The W-2 is, my goal for this year is to retire. And basically get all of my properties into the optimized mode. We always talk about acquisition, stabilization, and optimization. It's we've got a majority of it stabilized. We have maybe a third to a half of it optimized. The goal is to kind of get through the rest of the optimization for the rest of the year. Hopefully collect your dollar.
Good luck.
Because by the end of 2024, median home sales prices will be down 10% from the peak by the end of the year, by the end of 2024.
That's funny.
Market day after Christmas, I'm doubling down. Not on the bet.
No, I understand. You don't want to lose twice as much. I get it.
But but I still see, I am seeing some cracks for sure. Again, my belief was never that entry-level homes were going to go down. My belief was that the move-up buyer and the luxury buyer was going to go on the sidelines.
Right.
And what I got wrong in 2023 was I thought that the stock market was going to correct. It didn't.
It didn't. Yeah.
They got a bunch of these zombie corporations running around. So true. Probably stock guys look at me and they go, stick with housing, kid.
Yeah.
And they're not wrong. They're not wrong.
They're not wrong.
So that's why I see I got wrong in 2023. I, like you, expected a recession. Didn't get it. Yep. I think it is going to happen in 2024. I don't think it's going to be as soft of a landing because at Q3 at 4.6, Mike.
Yeah.
That's a really strong number, and that does not signal rates down. It does not. It signals compression of rates, but there's not going, in margin, but there's not going to be banks. There's not going to be a lot of banks that are going to be able to do that because they're still having to pay out 4.5% or 5% in their high yield accounts. So I think for 2024, my goal is, retire from the W-2. And then just, optimize the rest of the portfolio, because I, like Dion, very well might be done.
Yeah,
this enough thing. Yeah, go ahead, Dion.
There's a problem with that, Matt. Thank you, Mike, for letting me go before I forget it. But so, Matt, I think you're going to be in a very similar situation to me, right? So I have the members only live streams where we look at deals. We literally do a very boring video. It's not on regular YouTube, but we open up emails from an agent. We look at a property. We stream of consciousness investor look at it from location, neighborhood. We do the math, and we look at the physical aspects to help limit tenant turnover. Like, we go through everything an investor would do, and you do the boot camps. So we have enough. My fear every time I open up one of those members only things is going to be the same you have with your boot camps. You're going to be, let me walk you through looking at deals. Oh, wow, that's a great deal. I should buy that deal. And you're going to trip right into buying new properties. And it's not a bad thing, but I think it's going to go against your goal.
It's going to have to be something really impressive. Like the deal that I just did, the day that I signed the paper, it made me $1 million. Then when I start developing it, it'll make me another at least $1 million. And so I've created enough deals that had enough space in them and opportunity in them. I would not be surprised if I just developed some of my own land that I own in some of these deals. So it'll be just something different, something new and fun to learn. I'm a developer with a small D, not a big D. And so, so that's kind of what I'm looking at. But yeah, I think that the market's definitely shifting. We can see it. Rents are still fine. I'm not seeing any problem. I'm still seeing hundreds of inquiries per ad that I write. I talked to my 3 buddies that own construction companies, 3 months, 4 months, and 6 months out. That's how much work they have. And I was like, you're not seeing it slow down at all. He goes, no. He's like, one guy was like, I looted 4,000 sheets of sheetrock last week. Wow. I'm like, freaking hell. I was like, I just want a break. And a break would be like the economy actually really breaking a little bit, starting to go down and things like that. And then the people that need to sell, the ones that need to sell often can't sell because it's too expensive for them to sell. And they're in too much upside down in the deal and they can't get out. And we'll see some foreclosures. But again, foreclosures might be an all-time high off of where they came from, but they're not relative on any level to what, Mike, you and I saw in 7, 8, 9, 10, 11. They're nothing like it. Not even close.
Yeah, not even close. Yeah, it's funny. That enough thing that Dion brought up, right? Kind of been there a while. I do have one goal for 2024 that I'm actually kind of excited about. Both of you know that Olivia and I picked up a really nice spread in Vegas. And I'm going to take the opportunity to create a buy box, interview agents, document the whole process. My goal is to get to a point where I have a buy box and I'm doing what I used to do in 2002 and ideally find a great deal. Yeah. I don't know what that will be. I have no idea what the buy box is. I need to go talk to dozens of agents like I did last time. I want to try to document as much as I can. And I think that's going to be a lot of fun. I want to be clear. There's no chance that I replicate the portfolio I already have. I have no interest in that. I just want to take my my toys, my experience to a new patch of dirt and kind of document the whole thing. Nice. and see what happens. I think maximum, if I play this out a decade, we get 4. Back to my whole idea of, hey guys, just get 4. I might go there. But certainly want to try to get at least 1. I'm actually getting more and more excited about that. So much so that, I may turn down deals when they come abroad, when great deals come across my plate in Fresno, right? Because I don't want to change my orientation and get focused. I don't want to chase multiple rabbits. And, that's I'm actually pretty excited about trying to do this again in Vegas.
That's cool.
Yeah.
Won't happen in Summerlin, too bad.
No, yeah, Summerlin, I'm pretty sure won't make the cut. Yeah, I'm pretty sure. Yeah, that's a nice place. But somewhere, I don't know. I have no idea. So I'm pretty excited.
Have you picked any like even like top 3 that you're going down the path of or anything?
No, I'm
Yeah.
really what I'm trying to do now is the last 2 months or so, we obviously spent a month in Europe and then it's holiday season. All I've been doing this last couple of weeks is documenting 5 or 6 agents
Yep.
that I want to reach out to and I want to speak with on camera.
Yep.
Just to show, right? And then I'll talk to
Sure.
5 or 6 more that aren't recorded just to round it out. But that's where I'm at kind of right now, I think.
I like it.
And then 2024, we'll go to Matt first because he likes to make predictions like I do. Do you think we have the recession? Do you think we actually get an official recession called?
Yep. I do. I just do. I think that, I think that there's we're still working through stimulus, but now the layoffs are happening. The layoffs are finally happening. And, it's 1,200 here and it's 500 here and it's 1,800 here. And, it's not adding up to a lot right now, but I think, I think, it's not going to, I'm not calling for collapse by any stretch. That's why I've always said correction. I think that we're due for a correction based on what we're seeing. I know that my tenants are stretched. I get it. They still have to pay, right? And, some people are like, oh yeah, I'd hate to be a landlord right now. I was like, yeah, go enjoy working for the man.
Yeah.
And it's like, and not having it be a choice. So my prediction for 2024 is I think we do hit a recession. I think we do see from the peak, we see a 10% correction in median home prices, existing median home prices. Make sure we get the right chart. But existing median home prices. Absolutely. And it's not going to be the entry level people not buying. They're finally going to see, I think the other thing too is how long can the subsidies last for the new home builders at 5? That's what's keeping
they can last a lot longer when base rates are 6.5 versus 8.
Correct. But that's exactly right though. Cause we know that 5 still works. So going from 8 to 5.5, they're 250 basis points, right? But if they're going from 6.5 to 5 or 5.5, well, now that's twice as many deals for them that they can subsidize. So that's what I'm very interested to see because I've seen lumber prices come down, but none of the labor has come down. It's all extremely expensive for low skill people.
Yeah.
So
2024 would be interesting. How about you, Dion? Do you have any thoughts on whether or not we may or may not have a recession, or do you even think about that?
So normally I don't make predictions, but I'm going to make a bold one.
Oh no.
Absolutely. No recession 2024.
Okay.
I think it's going to be
a
bold run. I think we have an election year coming up. I think we have levers that people don't talk about that are going to be flipped is going to, not to be political, but if you control the media source, you control the narrative, and the narrative is not going to say we're going into a recession. Again, like most other metrics, you can make the numbers say what you want to.
Yeah.
I also think Matt's right. I think we can have no recession and the median home prices can adjust because those luxury, and you talked about this in your daily up today, luxury is where the deals are. So the entry level buyer and the investment properties that most of our friends are looking for, values will go up. Because remember, even if we do have an actual recession, whether it's reported or not, the majority of recessions, home values go up. Right? Out of the last 6, only 2 did it go down. One of those recessions was caused by a housing crash. So I'm calling for no recession.
Yeah, it's funny. I'm going to talk out of both sides of my mouth. So first and foremost, I called months ago that I think Q1, Q2 will be a recession. I don't like to change my opinion, so I will stay to that and celebrate if one happens, but also wear the swing and a miss if one doesn't. I will tell you, if I had to make the call right now on December 26th, with what I think is going to happen with the economy and interest rates, and I think the Fed's going to cut without one. It's just, I think we're going to skate by. I think we have a couple of quarters, Q1, Q2 of below trend. I don't know that they go negative. And
possible.
I think housing, the really big shocker, if I had to make one bold shocker for 2024, man, this is going to be nuts. I think housing collectively adds to GDP. Why is that important? Well, because the last 18 months, housing, whether it be new or existing, was negative. It was pulling it back. I think rates getting into the mid sixes and low sixes reignites some sales. I think it, to Matt's point, it makes it so the builders can build more and deliver more units at 5% 30-year fixed, right? Which is what Olivia and I got, 499. We don't buy that deal at 8. We wouldn't do it. But hey, you want to take me all the way to 499, give me 100K off and this, that, and the other? Sure, sign me up.
Exactly.
They could do a lot more of those.
Good.
And, new home construction, if rates stay sub 6.5, new home construction is going to have a freaking monster year. And that will actually make GDP positive. We could be struggling in other manufacturing, and housing is big enough, more important enough, it could pull us out when you put all those numbers together. So that'll be my crazy call for 2024 is housing is the reason we don't have a recession. But I'll stand by my earlier call just because I don't want to be seen as a flip-flopper. But yeah, it's going to be pretty wild.
I agree.
What do you guys think about unemployment, right? For most of my career, at least while I got my degree, full employment was 6%. Over the last 5 or 6 years, full employment's been dropped to 5.5 or 5%. 5%. We're sitting today at 3.7.
Yeah.
How high might it go in 2024? We'll go to Matt first.
I think it can double.
Double?
I think it can double. I think we can get to 7.
Oh,
I think it's going to be.
Well,
I really think it's going to be a tough year. I think it's going to be. I really think it's going to be a tough year.
Wow. We got to play with that a little bit. So unemployment to double.
Yep.
So 3.7 goes to 7.4. All right. Okay. Let's just say that's right. What's the Fed do at 7.4 unemployment?
Well, at that point, they're cutting.
Dude, they're not only cutting, they're going to 0.
Maybe not 0, but a lot, right? It's like as fast as we went up, we can go down, right?
Sure.
And so the way that I view it is I think that it's going to be, it's going to be a tough Q1. It's going to be a tough Q2. Okay. I think that you're going to see a lot of jobs shed. I think you're going to see, I'm not hearing a lot of optimism in CEOs forecasts for 2024.
Yeah, no, that's true.
Right.
So you think we get to 7.4, like quick, like,
well, I think we can. Yeah. I think 6, I think we can get 6, 7. I think it really starts to kind of pull together. Because what's going to happen is, all these, it is meant to be insulting. The infants on Wall Street that are spoiled children, they've been getting their way, and that's going to go away. That's going to go away. And it's because of what our good buddy Simon, the uneducated economist, talks about, credible threat.
Yeah.
I've been on that page with him since the go. And it's just like, they are absolutely going to, the market's going to expect a quarter and the Fed's going to go, nope. And then the world is going to fall apart. And then everyone's going to go, holy crap. Our debt is higher for longer than we expected. And so I really do see some of the cracks. I really do see, banks pulling back credit lines. I'm seeing it already. I've heard it a dozen times in the last couple of weeks. I'm seeing banks not doing X type of deal. They don't want to do the deal. So creative financing, that's great. And that's a great strategy to have in 2024. But yeah, I just see, I see us coming off the sugar high.
Okay. Well,
and it's going to be nasty, right? Cause you just said 4.6 for Q3. It's going to be nasty. It's going to be nasty, and I just think that, I think it's coming. I think it's slowly coming to roost. And I see that we can very easily get into the 5s with just some massive corporate layoffs. But as we know, it's really driven by small business. But small businesses, man, I talk to my construction guys all the time, and they're small, medium business. What happens when 1 out of 10 of your big contractors leaves you with the bill?
Yeah.
That was most of your profit.
Yeah.
And so that's what guys got killed with last time in 07, 08, 9, 10.
Well, we're just going to leave it there because I do have an 8:30 with a brand new investor. Matt is calling unemployment to double in 2024. Yes. We're going to let that hang there because I think an unemployment doubling changes everything.
It does.
Everything. And we're going to have to talk about that next week. Matt, where can they find you?
Lumberjack Landlord, YouTube and Instagram, 11:30 a.m. Eastern time on my live stream. Sundays.
Dion, real quick, what do you think? Unemployment to double in 2024?
So I'll be really quick because I know you got to get to your interview, and you can find me right here on YouTube, Dion Talk Financial Freedom. As the president of a CDL school for the last 13 years, I could say unemployment is not going to double because of the interest I've had in the last month. Transportation as a whole and manufacturing took a pause from about June to October. There was fear and uncertainty on what was going to happen with rates. The stability that happened in the last month, I've had presidents of companies that don't know I retired, and I had to have that conversation about 6 times in the last week, reach out and say, we're looking to grow by about 20% starting at the beginning of next year. Hook us up. And I was like, yeah, great. Let me introduce you to the new president of the company.
Yeah.
So I don't see unemployment going up. I don't think it'll break 5.
Yeah. I love it when we all disagree. I think the audience loves that. I think there is 0 chance. 0.001, because it's never.
Never
that
0.
It's never 0. Never 0. But it's 0.001 that we see a doubling in unemployment. I just think the amount of things that would come out of the government and the Fed in an election year. Now, if this wasn't an election year, it may go up, but there's no chance unemployment doubles in an election year. Guys, you're amazing. Take care of yourself. Merry Christmas. Happy New Year. You are both legends. Later.